We've got spot gold at $29.92, up about $3. The high's been 94 and the low has been 80, $29.80. I've seen headlines there that gold has broken 3,000, but these people are looking at the futures. I'm a traditionalist. I look at the spot. That's the price of gold there. Same thing for silver. We're trading just below 34. Yes, there was a bit of a battle to break through 33, but here we are. Up 10 cents. The high has been 34 and the low has been 65. If you look at the Dow-gold ratio, the silver-to-S&P ratio, all those ratios, they're looking better and better in terms of the precious metals.
Gold is trading at $2,992, just shy of $3,000, with a high of $2,994 and a low of $2,980. While some headlines claim gold has broken $3,000, they refer to futures, whereas spot prices remain slightly below. Silver is trading under $34 after overcoming resistance at $33, with a slight gain of 10 cents. Key ratios such as the Dow-to-gold and silver-to-S&P continue to improve, reinforcing the strength of precious metals. MarioInnecco, a financial analyst and commentator, explains that gold is approaching the key psychological level of $3,000, signaling continued currency inflation as central banks have no other option but to devalue fiat money. Despite efforts to introduce new financial systems, precious metals like gold and silver remain strong, reinforcing their historical role as real money. Investors are urged to hold on to their gold and silver as protection against financial instability. The speaker, MarioInnecco, reflects on his early gold investing experience, recalling when he bought gold at $320 per ounce in 2002. While long-term gains may seem easy in hindsight, the psychological challenge of holding through market fluctuations is significant. He emphasizes the importance of conviction in investments, especially when mainstream narratives attempt to discourage gold ownership. He shares a story from 2004 when the Financial Times published an editorial titled "Going Gold," dismissing the value of holding bullion. Recognizing this as a contrarian indicator, he saved the article as proof of how financial media often misguides investors. At the time, gold was around $405, and today, with prices nearing $3,000, it serves as a reminder that tangible assets withstand the test of time despite skepticism. Watch the full video for more insights. If you enjoy the content, like and subscribe for the latest updates.
Gold is approaching a key level as per the spot price of 3,000. In of itself, 3,000 is not that important. It's just a round number, and that's why it's important for the market. But all it's telling us, along with silver, is that we're going to continue to see the inflation of the currencies because the powers that be have no other option. Despite the fact that I think in the US they're trying to bring something new, and we're going to quickly look at that today as well. So yeah, hold on to your gold and silver for dear life. Don't let speculators and the powers that be shake you off your monetary insurance. And I'm going to give you an example of this that had a big impact on me when I had just started stacking a little bit of gold and silver back in '02. And I remember when I started buying gold, it was around $320 per troy ounce. In pounds, it was around 220. So it's made a big move, and some people might say it. And this is another reason I want to do this, because it's not only with gold, but with other investments. Those people who hold on and do well from it, they're told, well, it was easy, you just sat through it and it went up. But it's not. Psychologically, it's really difficult, and that's what I'm trying to talk about here today. So for those of you who are new here, you probably haven't heard this story, but for those of you who have been here a long time, you're probably tired of listening to it, or maybe not. So I'll tell you the story first, and I'll show you the editorial. I worked in the city of London in the financial sector for 20 years, and back in 2004, I was doing my usual journey. I left home 5 to 6, excuse me. I walked to the station. I lived near the station, And I used to buy the paper FT. Back then, didn't really have all the mobile phones and all the apps. So I used to buy the real paper and start reading on as I waited for my train. And I used to like turning to the editorial page for some reason. And on April 16th, this is the page I turned to. It was an editorial, anonymous. Someone in the FT wrote, "Going Gold, 2004." And it says down here, the pointlessness of holding bullion continues to sink in. When I saw that, I kind of laughed, and I knew that there was something wrong because I'd already been studying about gold and inflation. I had already listened to or read Ben Bernanke's speech in '02 about helicopter money, and that was a big signal to me as well. So I was kind of outraged, but not really at the same time. I knew it would be a great thing to cut off and laminate, which I did when I got to the office. And I wrote, of course, FT editorial, April 16th, 2004. The price of gold, as you can see, was $400.65. And here we are now at $3,000 virtually.
MarioInnecco highlights that stock market futures are slightly up, with the Dow gaining 220 points, 0.5%, the Nasdaq 100 rising just under 1%, and the S&P 500 up 0.75%. However, the overall market remains unstable. In the currency market, most pairs are unchanged, except for the dollar, which is gaining strength against the yen, up 0.75% and approaching 149. Meanwhile, commodities are performing well. WTI crude is up 1.3% to $67.20, and high-grade copper, a key economic indicator, is nearing $5, reflecting a shift from paper assets to tangible resources. The 10-year Treasury yield remains around 4.3% in the bond market, indicating a lack of significant demand for bonds despite stock market weakness. In the UK, GDP unexpectedly shrank by 0.1% month-over-month, though it grew 1% year-over-year. However, when government spending is excluded, economic growth appears stagnant, contradicting mainstream narratives of a strong recovery. Now, let's get back to the interview.
We've got spot gold at $29.92, up about $3. The high's been 94 and the low has been 80, $29.80. I've seen headlines there that gold has broken 3,000, but these people are looking at the futures. I'm a traditionalist. I look at the spot. That's the price of gold there. Same thing for silver. We're trading just below 34. Yes, there was a bit of a battle to break through 33, but here we are, up 10 cents. The high has been 34 and the low has been 65. If you look at the Dow-gold ratio, the silver-to-S&P ratio, all those ratios, they're looking better and better in terms of the precious metals. I don't have to tell you what's happening to the stock market. Overnight, though, the futures are up a bit. The Dow is up 220 points, 0.5%. Nasdaq 100 is up just under 1%, and the S&P is up 0.75%. That could change very quickly, though. It seems like the stock markets are not in a good place right now. Currencies pretty much unchanged, with the exception of the dollar versus the yen here. Dollar's quite strong. It's up 0.75%, just below 149. WTI crude is up 1.3%, 67.20, and high-grade copper. Well, high-grade copper is doing really well, and it goes to this idea of a real economy, of a move from paper to commodities that I've spoken about. Copper is a really important indicator for the overall health of the economy and inflationary pressures, I would say. So we're approaching now 5 high-grade copper, and that's significant. We're at 496, up 0.5%. Let's quickly look at the bond market. Well, the 10-year yield is still around 430, So we're not seeing this rush to buy treasuries despite the fact that the stock market is weak. And just another thing here, I think we had some economic data for the UK, and I saw some of the headlines. They said it was unexpected. GDP shrunk unexpectedly, but to you and I, it's not unexpected, right? So yeah, GDP month on month dropped 0.1. Year on year, it was up 1%. If you strip out all the government spending, GDP is not really growing. So with that, I'm going to wish you all.
The financial landscape continues to show instability, with gold and silver strengthening as fiat currencies face devaluation. While stock markets remain uncertain, commodities are gaining traction, signaling a shift toward tangible assets. Investors should stay informed and consider long-term strategies to protect their wealth amid economic uncertainty. Do you believe gold will continue to rise above $3,000, or will central banks attempt to suppress its value? How do you see the role of commodities like copper and silver evolving in the current economic climate? Share your feedback in the comments below. If you found this helpful video, hit the thumbs up and subscribe to keep up with our latest updates. We appreciate you being a part of this journey.